In today's video, we're taking a look at the EURUSD as it finally pulls back following a very aggressive rally earlier this month. We're also going to look at the DXY, and I'll show you the one level that I am watching on the US dollar index over the next week. All right, so looking at the EURUSD, guys, I mean, for the most part, markets have been pretty sideways here for the past few weeks. And I really think that looking at the EURUSD, the weekly chart is the cleanest look of this pair. And the reason for that is mainly because of this trend line that goes back to late 2022. So if you guys were around last year, you'll remember this breakdown here that we talked about. Okay, so this is when we got very bearish on the euro following the break of this trend line. And this is also where I started to target some of these lower levels down here, including this open FVG back here, which we clearly got around 1.02. Now, following this breakdown, what we talked about when the market was going sideways back here, and I'm just showing all this, guys, for context too. I think this is important to understand where the market has been in order to figure out where it might go, right? So looking here at this price action, you can see that following this very aggressive breakdown, we got no retrace into this area. So that left an imbalance up here in this area, right? Which we are clearly seeing the euro now tag this month. And this was a very, very aggressive candle here from the EURUSD. In fact, on the weekly chart, you can see that this was the most aggressive candle really since all the way back here, right? This back here, this candle really was the most aggressive in its time. And this one is kind of on par with what we saw back here. In fact, it's even more aggressive than that. Now, at the same time, though, this area around 1.09, if you guys have seen recent videos, this is what I said to watch out for because this would be key resistance for the euro. Now, the weekly chart is very clear, right? The market clearly found resistance up here in this area, never closed the week above it. And on the daily, it's a very different story. You can see where we got a lot of back and forth price action in this area. So not clear at all, right? And this is why, for the most part, pairs like this, I have really not been interested in trading while the market has gone sideways like this. Now, I am still technically short the euro. However, I'm short the euro versus the New Zealand dollar, which is currently up several hundred pips. So I mentioned that last week. I also announced that in real time in the VIP group in Discord. So looking at the EURUSD, where is this market likely to go from here, right? Now that we are getting a little bit of a break below 1.0777. This is the key level that I've talked about in recent videos as well. You can see that, support back here, support here on the last few candles. And this level goes back to lows from last year. So on the weekly chart, you can see that we have this low right back here. It was support through here. And that's why we were seeing the euro bounce from that area this week. So if we get a sustained break below this, right, which it looks like we probably will, unless the market can rally here in the last couple hours, then this area up here, these lows are going to flip to new resistance. Now, there's nothing saying that the market can't just close below this, okay, close below and then close right back above and make this a failed breakdown, right? That could also be the case here. However, when we look at the DXY, there is an area that I've talked about in recent videos as well that really has my attention this week, potentially sometime this month, although we are coming up in the last week here of the month. So we'll see if the market does get up here, but this is what I've talked about in the past few videos. So last year, guys, and again, context is key here. So let's talk about this going back to these lows from 2023. You can see that we have this triangle that had formed, right? Now, this failed breakdown back here, this is where I was getting very bullish on the US dollar last year. You guys will remember, this reclaim around 102.50, 102.60. We talked about this at length, and this right here opened up, these lows back here. And then eventually, once we got the break up here, I was targeting 109 to 110. We mapped all this out as the market was moving higher during that time, okay? Now, since that time, though, what you'll notice here is that this back here was a failed breakdown, right? A fake out. And this up here on a much larger scale was also a failed breakout, right? Because the market is once again trading back below this. All right, so this was the retest following the breakout, and now the DXY is back below this. All right, so really, you can see where I'm going with this. If we get the DXY here into the 105 area, now keep in mind that this area over here, okay, right around 104.60, especially on the weekly chart, this is going to be resistance that the market's coming into right now. So really, this is a resistance area in the 105 region. Okay, so it's not just one specific level, but really, ideally, I want to see the DXY come up here and tag 105. All right, because right now, that's basically right where that trend line is that goes all the way back here to this high from October of 2023. Okay, so if we look at this here over the next few days, like let's say if it does get retested on Thursday or Friday, you're looking at about 104.90 up toward about 105. Okay, so that's where I think that we are probably going to see the DXY retest here over the next couple of days. And then from there, what we get here in this area from the DXY, I think is going to be very telling in terms of where we see the US dollar go in April. Because, make no mistake about it, even though this could be a failed breakdown, the market, this was a very aggressive breakdown, so some relief here is expected. In fact, if you've seen recent videos, this was the area down here between 103.50, really 103 to 103.50 down here. This was the area that I was saying we could see some relief from the US dollar. Same thing with the EURUSD and that 109 resistance area. So some relief here is to be expected, right? And this was a very aggressive breakdown. And this up here is going to be resistance until proven otherwise. All right, so this, in my opinion, is not where you want to be getting bullish on the US dollar. If you were getting bullish down here in this area, well played. I think that was, a decent area to get long. However, with the DXY now coming into that 105 area, you've got to be really careful here. All right, so, really, and guys, I can't sit here and tell you if this is going to hold up as resistance or not. We'll have to wait and see. This is one of those cases where you have to react to the market. Don't try to forecast what might happen. Okay, so 105 is going to be resistance for the DXY. So basically resistance up here for the US dollar. If we get the market closing up here, ideally I would want to see it closing above this low to turn bullish. If it can reclaim the area between 105 and 105.40, all right, that would be bullish going into April. So this, over the next few days, guys, is going to be really critical, a really important time here for the US dollar, right? So anything above this on the high time frames, we're talking about daily and weekly closes up here in this area, that would be bullish for the DXY. And alternatively, if we get bearish price action from this area over the next few days, then that, of course, could signal the next move lower for the DXY back down here towards support. Okay, so looking at the EURUSD, knowing that this essentially, for the most part moves inversely to the EURUSD. Although, I do want to point out too, guys, I get a lot of comments sometimes saying, why do you look at the DXY and the euro and the pound? Because they all tend to move together, obviously with the DXY being the inverse essentially of the EURUSD. And while that's true for the most part, there are variations in this chart right here that you will not find on EURUSD. Okay, you just simply won't find it. And so there is some massive benefits to looking at the DXY if you are trading the majors. All right, so it's just something I do, guys. I mean, it doesn't mean you have to do it, but I think personally, in my opinion, if you're not looking at the DXY while trading the majors, I think you are missing out. So with all of that said, okay, where could the EURUSD be going here? Again, this area around 1.0777 is going to flip to resistance following a close below it. And as far as support, guys, we know that this area down here is going to be key support for the euro, right? We've got these lows back here. We've also got these highs here around 106.15. So this is going to be key support. However, if you look at the DXY, where it's positioned relative to 105, okay, I'm not confident that the EURUSD is going to get all the way down here before we get a bounce. So instead, what we could see is the euro finding some support back here in this area, right? You've got this little pivot that formed right back here. And just given where the DXY is relative to 105, I do think this area, right down here could come into play somewhere around 107, maybe just above, okay? Now, I wouldn't long that, okay? I would not long from here simply because that's not the way I trade. I don't simply long a market at support or, in the case of the DXY, sell a market at resistance, right? I know that these are key levels, but that's not the way I trade because in my experience, a much more reliable way to trade is to watch for fake outs. And what I mean by that is like this back here or, this up here, right? Where this is now resistance, this back here was support. We got the rally here. And now the question is, are we going to get a continuation from 105? All right, so we'll see what we get here over the coming days. But again, guys, I really have to caution you. If you are getting bullish on the US dollar here, I think that you are playing with fire simply because this area around 105 is, likely to trigger some type of reaction, even if this is not the start of the next leg lower for the DXY. Even if we do get a reclaim up here, you are likely to get some type of reaction from the US dollar around the DXY 105 level.